Welcome everyone to our event tonight and thanks for dialing in. Tonight we will be answering the question, should I sell now or should I wait? The overview will be a quick rundown in terms of what's happening. We are now 7 weeks into lockdown. It can be a little bit difficult to work out what's happening. I'll then be joined by Dan White and Sam White, and we will be running through a Q&A. So it is possible to actually put in some questions into the chat box and we will do our best to answer them. So leading up to the end of June, it was really hard to find much negative economic news. And when we had a look at GDP growth, it was back to pre-COVID levels. The unemployment rate was coming down quickly. And then New South Wales went into a lockdown. And it has been quite interesting to watch what's been happening over that time. So starting with house price growth, what we have seen with house prices is a big increase over the pandemic. So leading into March, we did hit a median of 937,000 in Sydney. Over the past 18 months, it has shot up to 1.275 million. So that is an increase of well over 340,000. And it is one of the sharpest acceleration in pricing that we have seen over a prolonged period. So if you take us back all the way back to 1980, you can see there all the subsequent booms and busts that have occurred in Sydney. And really right at the end, you can see that big uptick in pricing that we've seen since COVID. So very different compared to what was expected early on in the pandemic. So it's not just Sydney that's seen this incredible growth in pricing, it is also regional New South Wales. So regional New South Wales prices have gone from 489,000 right up to 600,000. But although that's not as much of an increase as what we've seen in Sydney, when we start to drill down to many towns and many suburbs, we can certainly see what's happened at a more granular level. So Byron Bay really tops the list at the moment. The median has increased from 1.475 to 2.52, so it has gone up $1 million over a 12-month time period. Northbridge up to 4.04 million. When we go across to Homebush, heading from 1.825 to 2.71. Narrabeen on the Northern Beaches hit 3.2 million. And Mossman hit 4.45. So you can really see that although Sydney's median went up by 340,000, we certainly have seen some areas that have increased far in excess of that. So as we were leading into the end of the June quarter, we did see some really positive signs around the number of properties for sale. So the number of listings actually increased by 24% over the June quarter. It was up, that was compared to 2020. If we have a look compared to 2019, it had almost doubled. So on one hand, although we had seen lots and lots of price growth, there was lots of properties coming to market, which theoretically should have started to really slow things down a bit in terms of price growth. Once the lockdowns hit though, we did see the number of properties for sale drop off considerably. So people have really held back. You know, we can certainly see in these numbers. If we compare to July last year, they have dropped by 23%. If we compare to June, they have dropped 26%. So it has been quite a change in terms of the supply of stock available. So stock has really declined and you know, we have seen that through July, but we really haven't seen the same sharp deceleration in terms of property buyer interest. And it's kind of hard to look at, or it's kind of hard to work out sometimes exactly what's been happening with demand. But some of the things that we do track are some really detailed metrics around auctions. And what we've seen with active bidders at auctions is a big increase in that number. So it's currently sitting at 5.25. That number typically hovers around 3 to 3.5, and it is actually one of the highest levels that we've ever recorded. So we are in lockdown, and auctions are taking place a little bit differently, but at the same time, we've got a lot of active bidders at every auction that takes place. That's leading to some big prices as well being achieved. So when we have a look at the gap between the highest prior offer and the price that the property is sold at auction, there is a 10% gap between those two metrics. We've got lots of buyers out there. We can see that through our auction data. We've also got a lot of money out there. So there is $11.1 billion worth of home loan approvals that were put through, or which were recorded by the Australian Bureau of Statistics. That is more than double what was recorded in May 2020. And it is $2 billion higher than the previous peak, which occurred in 2017. So in summing up, what we're finding throughout July and heading into August is that there is a lot of buyer activity and lots of people bidding at auctions, a lot of finance backing them up. But at the same time, we're not really seeing the number of properties increase in the same way that we were seeing in the June quarter. So there is a shortage of properties. So to talk more about this and talk about whether now is a good time to sell, I would like to invite up Dan White and Sam White, and they'll be, Dan is the Managing Director of Ray White, Sam is the Executive Chairman of Loan Market. So I'm going to start with you, Dan, and ask you a bit of a question about how buying and selling is different now we're in lockdown.
Well, it's different, but it's something we've become really familiar with, isn't it? As a national business or across Australia and New Zealand, we've been obviously involved in transacting during lockdown through multiple times through the last 18 months, many times in Victoria, obviously New South Wales and Queensland and so forth. So we've become very comfortable with doing it, and I think more and more of our customers are as well. The method obviously has to change to fulfil community expectations. Absolutely no shortcuts in what we do to the letter of the law, and in more so in some cases. So using a lot use of technology to ensure people don't need to inspect as much property early on, a lot more virtual inspections, all of our agency doing much more extended videos about what to expect on the property, so they need to do less physical inspections. And when those inspections take place, they're done in a very safe way, one-on-one. By appointment only, to ensure that people are spaced out and that the place is safe. And finally, leading up to, we talk about auctions being virtual auctions as well. So, there's people bidding online, and again, that's a method of sale that's transferred to the digital environment extraordinarily well. So it's quite different, but it's become more and more accepted. And it's become something that we don't think is an obstacle to transact and achieve competition and achieve great prices for our customers. We do encourage, obviously, people to get fully approved finance before they start entering properties and making offers. That's a big change, and we'll talk more about that with Sam and the loan market business. The interaction between real estate and finance becoming more and more important as the lockdown continues on. So, and you talked about before about less stock. Sure, less stock. We still sold over 1,600 properties last month in July, in lockdown, which is more than we did 2 years ago. Sure, less than we did in May, in those really bubbly times of May, but certainly still an active market by any means, and a safe market too.
Great, an active market in a digital world. So Sam, let's talk about housing finance. It obviously has gone through the roof. We can see it through the ABS data. I mean, what do you think can really slow it down?
Well, Nerida, it's amazing. You look at where we were 12 months ago, and who would have thought low interest rates drives demand? And right around the world, we've seen that. Of course, in New Zealand, it's no different. The big thing that will slow down demand, I think, will be: do we see rates rising, or do we see APRA maybe start to put some restrictions on what banks do? Their mandate, the obligation that APRA have, is to make sure that the lending market is operating efficiently, and safely. That they're looking at making sure the banks aren't doing irresponsible lending or bad credit. There's no sign of that happening at the moment, but APRA, I know, there's a lot of talk that will they start to potentially put restrictions on, like they've done in the past, around restricting the number of the growth in, say, the investor lending, where there's some sort of cap they put on some of the ratios that the bankers look at when they give out loans. And that may be something that could slow the market down. But right now we're seeing really strong demand right across the country, and particularly in New South Wales. Application numbers, pre-approval numbers, buyers going through the pipeline are as strong as they've been right the way through this whole pandemic.
How about the RBA? Do you think they'll move on rates sooner than 2024?
Well, everyone's got a horse in that race, right? And I think my personal opinion was that they probably were going to have to, Whether they do, maybe this lockdown makes that less likely for a little, push that out a little bit longer. I think that will remain to be seen. But I do think rates being as low as they are for up till 2024, that brings its own challenges. And I think you look at the RBA to be acting the best interests of the economy. And I think my expectation before this lockdown was that it was going to happen earlier.
Dan, I'm going to just ask you a question about once we get out of lockdown. I mean, there is a view that things will really accelerate very, very quickly once the lockdown ends. I mean, what's your take on what will probably happen once we all get to go out and about again?
Well, I think you're right. There is generally a strong consensus that things come end of lockdown, whatever that is, November, December. There's probably consensus that that's the view too. But there's a really common view that, and I read a lot, that there's more stock will come on and even maybe achieve higher prices. We're seeing that a lot, aren't we? And we discussed that a fair bit. But there was a strong consensus 18 months ago too, very strong, similarly strong, but exactly the opposite. It was 18 months ago that we used to talk as a family a lot. We have calls at 8 o'clock in the morning, what's happening in the market. Everyone was saying, a lot of the banks and stuff were saying the market was going to fall 30%. Remember those calls? You used to talk about the finance was strong, right?
You and I did some sessions, and we were seen really as contrarians at that time that the market wasn't going to fall, that rates would provide some demand, and we saw that come through. I mean, I was surprised how strong it was, to be honest, but we didn't think it was going to fall. But equally, it was in a contrarian position at the time, wasn't it?
Well, I think it was because the data that we were seeing through loan market was really strong back then in March and April. I remember those discussions. I was always surprised. I wasn't sure whether being an elder brother you were sort of exaggerating a little bit as it happens now and again. But I thought that it was, would that happen? Would it continue on? And it did. So there was a strong view last year that things were going to be strong. Different now. Last year people were saying it was going to be very weak and ended up being strong. So be careful of that broad consensus and make your decisions on that. It's important to think through the specifics of what's different now to what it was last lockdown. Last lockdown, we bounced out of it really strong. More volume, more higher prices, everything else. Will that happen again this time? Well, this time there is no JobKeeper. There was $90 billion injected into the country on JobKeeper. That's no longer there. Home builder grants program for first homeowners have gone as well. There's risk about virus being extended. And remember the big one is that we've had 20% price growth in Sydney over that period of time too. So it's dangerous to just assume that because we bounced out of lockdown well last time, it's going to happen again. Sure, we're expecting pretty good conditions, no doubt, and that's the way it's going to work. But I think people really need to assess the specifics of this lockdown.
And I think it's a good point. I mean, there's risks both ways, right? And in all this, it's about assessing, the balance of what could happen either way. And we're close to the end of this. Hopefully, the vaccinations coming through. A lot of optimism about the end of this year. So I think that's one of the differences between now and where we were. Is we're I think, at least we feel, I hope we are, a bit close to the end of it. I think that is something that is giving a bit more energy and momentum to it as well.
I think we can assume there is more stock coming through. There will be more stock come on the market later this year. That'll be the case. Will it be better conditions, Nerida? We obviously don't know. The market now is trading very strongly. We saw the 5.25 bidders. So today it's trading very well. Buyers are competing above the expectation what the vendors want. There's risk to that perhaps later in the year. Maybe it will, maybe it won't. We don't know, but we can say that right now the market is trading very strongly.
All right, Sam, I'm going to ask you about home loans, and more specifically, I'm sure a lot of people want to know this question: what is the best home loan I can get at the moment?
Well, it depends on your circumstances, Nerida, and it depends on what it is that you as an individual are looking for, and a mortgage broker now has to act legally is acting in the client's best interest. So they're going to ask you, what do you want to do? What are your objectives? And from that, they'll choose a list of recommendations. But rates, you can still get fixed rates under 2%, slightly higher. The comparable rate's actually slightly higher than that, but it's all around about that 2% sort of mark. Variable rates you can still get in the early 2s. So there's still a lot of activity that's out there. And one of the things that's really popular at the moment is mixing and matching. So a bit of fixed, bit of variable, people are hedging some risk around that, bit like sort of vaccines. As though vaccines, you're not sure if you can mix and match. With home loans, you can, and a bit of flexibility around variable and fixed is something that a lot of people are going for at the moment.
Okay, I'm going to ask a question to both of you. You know, typically people sell and then they buy, but in a fast-moving market that can, you know, be a little bit scary when things are moving so quickly. So is it a good idea to buy before I sell in this market?
Well, I think this question addresses the issue of a little bit less stock in the market and people being a bit anxious to sell before they buy because they haven't really seen something they want to purchase. There's obviously two strategies, aren't there? Obviously, buying before you sell is one option. That's the two house club, we call that, owning two properties at once. You've got two mortgages, two properties. There's obviously a bit of risk involved in that process. There's a bit of stress involved in that. Obviously, it requires detailed examination of your finances, your capacity, risk scenarios, contingency planning if things don't go so well. Obviously, at the moment, people can be confident they can sell their property quite quickly, so that reduces the risk. But it's still a big process. It's not available to everyone. It's only available to certain people that can get the support from their banks to do both. And that's a process you need to go through. The other option, obviously, selling before you buy, and there is some hesitation in the market at the moment on that basis because people haven't seen what they want. What I can say to those people considering that question at the moment, you know, I'd like to sell, but I can't find anything yet. I'm a bit worried about selling first. There's a couple of points. One being is obviously, you know, the rental market is still, there's a lot of availability in the rental market for people to rent if they do sell their property, and you can find a suitable accommodation for their families. The other one is, if you're going to do it, if you're going to look at this though, please sell it, do it properly. There's a lot of talk about off-market sales and people just dabbling and maybe selling off-market quickly. We really recommend as a family that do it properly, market your property professionally, get the best possible price. And if you're unsure, talk to your agent and tell them what your dream price is. That if you get that price, you'll be happy to move on with the property. Even if you do have to go and rent for a while, take a little bit of a chance that you might find the next one. Talk to your agent and express to them what your dream price is, and he or she may be able to give you advice whether that's achievable or it's not. But I think that's, you know, what do you...
Well, what you said is 100% right. It's about balancing risk, and you know, if you do, you know, the enemy in this will be time. So yeah, it's a matter of how quickly you can move through this. In the same marketplace, in theory, the valuation should be relative and relatively hold. But the big thing is time in this, and that's why, you know, auction orientated. That's why auctions are so important, I think, in this market, because it does set valuations quickly. But you know, it is something that it does increase the risk, and you do need to get proper advice. And I definitely wouldn't be making a broad statement to anyone that you should or shouldn't do this. It's a matter of understanding your individual financial situation. Talk to a broker, and they can really help you out, make the decisions right for you and your family.
And banks, what are you seeing with banks, the bridging loans and that sort of thing at the moment?
Well, they're still there, and there's a lot of new products that are available for that type of situation. But you know, again, it's stressful, as you pointed out, and so it's making sure that there are products available. There are definitely things you should know. There are risks you should understand, but if that's what you need, what suits your family, there are definitely products that are available for you.
How about investors? I mean, we have seen a return of investors back into the market. I mean, what's your view around investing in this market?
Well, I think the great thing about a lot of people are here on the call from Sydney, and also obviously Greater New South Wales. We've talked Sydney for a moment. You saw that chart before. We grew up in Queensland. We moved to Sydney, sort of similar times, and I remember seeing Sydney house prices and thought they're crazy. Surely they can't keep going up. And that was a long time ago in prices. I hate to think what opportunities I missed out on for a few years while I took to get to know the market. I mean, we're fortunate in the family business to see so many people do so well out of investing in property, but it has to be over a long period of time. And for people to take a short-term view on investing, especially at the moment when prices are where they are, obviously you're going to be a little bit, wondering where's that price growth going to come. And as Sam said before, if there's some short-term price growth, maybe the government might try and slow that down anyway. But I think for anyone trying to build value and wealth for their families, the long-term wealth creation through investing in Sydney real estate will remain so. And it's about getting in and staying in for the longer term, rather than trying to pick the timing of the market or pick the month or pick the year. It's about time in the market over a long period of time, and people will do very well on it.
Sam, how about finance?
I think on that, sorry, just on that, sorry, Nerida, one of the things on investing now is you can also lock in rates now. So, investing's not just about the income and about the capital growth. It's also about making sure that your finance and your debt structure is the right process for that as well. So you can get 5-year money at say 2.5%, maybe a touch more. Lock that in, and yields. Working out how you can price that and take that on moving forward. We've seen both. The Labor Party recently come out and say that reverse their positions they took to the last election around negative gearing and capital gains tax exemption. So we are going to see, for the first time, really going to election with bipartisan support. First time for a while, anyway. Bipartisan support for investors. So I do think that's a bit of a clear sign that in this run up through the end of this year and into next year, that investors should be saying, well, we've got no flags that are flying, and there'll be opportunity. So, like you said, long term, making sure that you can manage that cash flow, and there'll be opportunities out there.
We were looking before at rents too, weren't we? That the rents have held up. We've seen Sydney had a vacancy rates jumped a fair bit during the pandemic because obviously people moved back in with family or with friends. That vacancy rate has dropped, meaning there's less rentals available. There's about 3% vacancy rate. It popped up to about 4%, was it, Nerida? So it's definitely, rents are looking solid for investors at the moment. And certainly I think investors are more confident on the outlook for rents over the next little while.
Yeah, absolutely. Something on a question from the audience around inspecting properties virtually. So, regional New South Wales, we've had that incident today in Byron Bay. But is it possible to do that? And how good is the technology now?
Well, I'd encourage everyone to. There are many stories of people buying sight unseen. I'm not recommending that everyone should do that, but with technology and with agents becoming much better at showing properties, warts and all, can we call it, to people, to buyers. We've seen so many people purchasing sight unseen from outside their local area, selling in a really strong local market and buying somewhere else and pocketing the difference, moving out of Sydney, moving to the regions. We've had heaps of stories of people from Melbourne buying Adelaide, buying other parts of the country during that lockdown happening last year. So it's amazing how, it's a bit of a cliche comment, but things have changed. The old ways of doing things have moved a lot in the last 18 months, and there are many more people much more comfortable with buying properties through a virtual inspection as opposed to physical. And there is so many ways for people to get very comfortable with purchasing based on that.
Yeah, it is amazing how much that behavioural shift has been brought on by COVID, not just obviously in properties, but in everything. How different are we doing things now to what we all thought we would be doing 2 years ago? And I think being comfortable now with virtual inspections is one of those shifts.
One of the remember school holidays? Remember you wouldn't auction properties during school holidays, and I mean that's all gone. Not selling things in December because that's all changed too. So all the old sort of the rules, so to speak, of how the industry worked has been thrown out, and that's particularly exciting.
Yeah, it is interesting. Looking at the best day to auction a property, we did that analysis recently, and it was quite interesting to see, what a great idea a midweek auction was, which isn't really the done. Hasn't been
exactly.
done
Or mid afternoons, and we're seeing a lot of auctions. 4 o'clock midweek, and they, as you showed earlier, still averaging 5 bidders. 5 bidders per property on average.
On a virtual inspection.
Active, they're active, but not as registered.
They're people. That's active, that's
people putting their hand up. It's phenomenal.
So Dan, there's a question from the audience. If you had the chance to sell but not buy now, would holding off to see what the new year brings be a risk worth taking?
Well, I think the question there is a really fundamental one, and I'll talk in very general terms, and obviously everyone's got their own particular personal issues and personal risk profiles and things to touch base. The benefits of obviously selling in a market like this, where there are 5 active bidders per property, there's less listings on the market, so there's less properties to compete to. Obviously, they're pretty strong reasons to sell today. We haven't seen so many bidders at auction ever before, actively bidding. It hadn't happened before, and we've never seen such a quick pullback in stock. And people are still happy to buy, obviously, through lockdown, as we've seen before. So they're really strong reasons to transact today. Obviously, the question there says if someone can't then buy till the new year because maybe there's not enough stock around or whatever, that's buying and selling in the same markets obviously has its advantages for people because they know that they can obviously get the trade at exactly the right price. So we'd always recommend for people, if you are going to sell now, be active in bidding, be active in looking, for the next property. There'll be more stock, based on our numbers, there will be more stock coming on in the spring months based on what we're seeing, people holding things back for the spring. So there will be more, but stay active. I wouldn't wait. I wouldn't sell and sit back for 4 months and wait personally because the Sydney market is strong. If it gets away from you and it keeps running, you can get price out of where you want to go. So if you want to transact, now's a great time to transact, but you do need to be active and find that next one as soon as you can. What do you reckon?
Well, I mean, I get asked this question a lot at dinner parties, and I'm sure you do as well. And Nerida, I'm sure you get asked more than both of us. I think we know a bit about it. We've been involved in it a lot. I've made a lot of mistakes with this. I get it wrong. I think anyone who tells you they know what's going to happen and can tell you the answer to that question, I don't think they don't know that they don't know, or they're misleading you, because I think it's a very hard question to answer. And the way you should think about it is saying, well, what do you think is going to happen to the environment between now and then, and can we keep going at this pace? Now, you saw that graph. You saw that how unusual this phase of the market's been. And real estate does work in cycles. So there's times when it's stronger, times when it's weaker. We've all seen that. We all know that. But that graph we saw, it's a bloody unusual graph. You can see it for yourself. That's all I'm going to say about it. I don't think you can predict that question. You can make a recommendation on that. I think it does depend on the stock levels, your local market, how much property is coming on, but that is the question we get asked all the time, and it's one that you'll get wrong as much as you get right, I reckon. I
think it's too, isn't it? Like when you are selling, if you are nervous about getting back in, you're in control of the sale process.
Sure.
The vendors, the way the industry works is you communicate what you want to achieve. Your numbers are there. You express what you want. You stay in control of it. And if it doesn't meet your expectations, or at the end of the campaign you don't think you got your dream price or whatever that price is, then obviously don't accept the offer. But be active. I think be in the market. I think sitting out and stuff is dangerous. You're going to transact, get in and out when you can. And I think everyone, there's always seller's remorse in Sydney market. People are concerned, but it always works out that people eventually get back in and life goes on.
Well, thank you, Dan, and thank you, Sam, for coming on and answering those questions. And thank you, everyone, for attending. And if you've got any more questions, please contact your local Ray White agent or your local loan market mortgage broker. After tonight, we will be sending through some details on the event, in particular a recording of the event, the most recent copy of our report, our Ray White Now report, and also just a bit of a summary of what we discussed tonight. So thanks for coming, and it really was a pleasure having you all here tonight.